My initial instinct is that no, like I don't think it would make any difference. Like if you sold now, you're taking a huge loss and then you'd still have to shell out like several hundreds of dollars to take your new positions. What's up, guys? Welcome back to your favorite finance boys. Call us the Know Nothing Boys because we don't know nothing. That is what I've basically realized in the last couple episodes of trying to trade options is that I literally don't know anything. I'm not doing a good job. Maddox, how are you feeling? How's your portfolio looking?
I'm feeling that same sentiment. Yeah, I don't. I mean, I don't know if we're talking portfolio values yet, but I've definitely gone from being way up to way down on my investments. So.
Oh no, that's some foreshadowing. Actually, that's not even foreshadowing. You just told us what happened. So that's fine. Well, okay. So I don't know about you. I made two specific trades since the last episode. I guess quick recap of what happened in the last episode. I was down about $150 or so, and I believe you were up about $500.
Yep,
but
correct.
you were contemplating whether you should sell, take some of the profits to keep, or if you should just hold, be greedy. I told you sell. Sounds like you didn't sell.
I didn't. I should have definitely taken your advice, sold some at least, but I chose not to, and I've come to pay the price for that.
Well, after this episode, you will probably not be saying you should have taken my advice because, let's get into it. I made two specific trades this week, or since the last episode, and I made the same trade. So I did two call credit spreads. I bought them on November 7th, and they both expired 3 days later on November 10th. Again, I'm going for these like short-term volatility type trades that aren't going to see a lot of shift in price. So the two tickers that I went for, SPY, obvious, classic, and QQQ, right? So I bought in SPY for $437. I bought a call option and I sold a call option at $435. So the concept there would be that was a hedge against the market. I took your advice this time. I was like, oh, okay, maybe I should be hedging against the market because Maddox said so. And I figured if it went down, then, in this case, because I sold the call, I got a credit of about $106 immediately into my portfolio on that day. And the idea was the market would continue to go down, and then both options would expire worthless, and I would get to keep the $106 on SPY. Similarly, QQQ, I bought a call for 372, sold a call for 370. Same thing, a bearish expectation, made a $112 credit, expecting both to go down, lose all their value, and I would get to keep my $112. Spoilers, neither of them went down, and they actually both did exceedingly well in those 3 days. I don't know how that happened. And grand total, I lost about $400 on those two options. So when you subtract out the original credits that I got, total loss of about $180.
Not too bad.
Not too bad, but considering I was already at like 880, that brought me down to about 700, which is not great. I'm gonna pause.
Could be worse.
It could be worse, but I'm gonna pause there because I don't know if you remember this. I had one other option that I talked about, an option like string that didn't expire until December 29th. And I didn't sell it. I still had this option chain. And it was supposed to go up, It was a bullish outlook, or let me think about this. No, it was still a bearish outlook on the SPY as a whole. I bought into that one around 425 on October 24th. Currently, right now, it's SPY as a whole is sitting at 455 or so as of today. So first I want to kind of talk about maybe why we saw this huge jump But also, then eventually I'll talk to you about what's going on with this specific position. Um, I'll pause there. What's going on with you?
Well, I was up pretty big. I was up about 50%, $500. Basically all my positions. I took 5 positions essentially against stocks, specifically kind of stocks that I thought were more overvalued and more interest rate sensitive. And that was kind of my whole thesis, is that the higher interest rates have not been reflected in the prices of stocks yet, because you know the interest rates are the discount rates of stocks, and so those have gone up a lot, and stocks have not come down enough to kind of make that equation make sense. Um, and so yeah, initially those trades were working out really really well. Leading up to our last previous episode, the stock market basically just sold off, just straight down, and I thought that we could definitely see more of a sell off, and my strike prices were at levels much further away
Right.
than where we even were. So this whole time I've been thinking this could be a big move.
Right.
And so we weren't quite there yet. So while I was up a lot and it was like tempting to take profits, I tried to stick to what my initial bet was, and it was, I pretty much said, like, I'm making a YOLO bet.
Yep.
And I was pretty convicted in my thesis, and but yeah, so obviously pretty much since I think our last episode, the stock market went straight up, and I think has probably gone higher than where I initially even placed my trades. So
Yeah, I did the math. It's 7% in the last month.
Okay, yeah, which is
Incredible.
that's a big move.
Yeah.
So yeah, my $1,500 worth of options are currently worth $350.
No.
Yeah, so I'm down
That's
quite a bit from where I was.
huge. Oh my god.
Yeah, so all my positions are now like pretty far out of the money, except for my put on the TSLL, which is like the 1.5x leverage Tesla. So that one's actually still in the money. So that's kind of where my, like, the $300 that I have is, because essentially everything else is worth zero currently, or near it. But yeah, should I go into like what kind of happened, what drove this move, or?
Right. I mean, like, what's going on here? Because similarly, I also, well, okay, in the opposite direction. I think I misspoke earlier. I think I said I still have an open bearish look on the market. I actually think I have an open bullish look on the market, but my situation kind of unsimilar to yours, I guess, since mine was a volatility bet. I'm just not able to sell my chain off. And it's jumping all over the place. Like yesterday, it was up 1,200%, that single position. For it wasn't a ton of money. That because when I purchased it, it was for like pennies, So 1,200% was like $150 or something. And then today it was down like 500, and then it just keeps bouncing up and down. And it's because the bid ask spread is so wide, I'm unable to sell the chain. So
yeah. So is there ever a bid?
no. Like I tried to sell it at $2 per contract. It wouldn't sell, and the bid ask it's a crazy spread. It goes from like the debit side being as high as $7 to the credit side being as low as like -$5. So it's a huge it's a huge spread. Truthfully, I don't really understand it. I just know that I tried to sell it off at $2, it didn't get picked up. I tried to sell it at $1, it didn't get picked up. So I'm stuck again with this contract chain that I'm unable to sell. I see it in my portfolio as like it'll be plus 100 1 minute and then it'll be minus 200 the next minute, and it just jumps up and down. I don't know what's going on.
Yeah, I don't really know either. That sounds. I haven't experienced that probably because I'm just sticking to the vanilla puts and calls.
But all that to say, like, yeah, what's going on? Why did we see this huge spike in the market in just the last month?
Yeah, so I'm gonna switch to my chart real quick. Um, so this is the same chart I showed last time. Basically, my play by play of how things have kind of played out since COVID. So basically, right here, like, um, this is October 31st, is right at the bottom when, stocks bottomed and then just completely rallied, almost back up to new highs. So on the 31st, there was what is called the
Halloween.
quarterly that too, the quarterly refunding announcement, which is something that I've known to exist, but like haven't paid any attention to, and it's not really been like a thing that is like driven markets
Okay.
from my perspective at least.
So I'm not familiar.
Um,
So explain to me and everyone at home what this is.
so basically, it's the Treasury of the United States,
Okay.
right? They're coming out and saying, I guess they do this each quarter, but they come out and say, this is how much debt we anticipate selling in the next quarter, right?
Right. Okay.
So, and then the market has, and when I say selling debt, basically, you know, the U.S. government issuing debt, that's essentially bonds, right? Bonds that investors buy. Correct. So that's like the bond market. That's like the supply side of the bond market.
Right.
This is how many. This is how much new bonds are going to come on to the market, right?
Right.
So the market participants, they have a expectation of like how many bonds they expect to issue,
Yeah.
right? And it's not just how many bonds, but what is the duration of those bonds going to be?
Right.
Because if it's a lot of short-term debt versus a lot of long-term term debt, that has different implications because if it's a lot of long-term debt, that's essentially like, okay, the government has to pay these really high yields, and if it's short-term debt, they don't have to pay as much in terms of yield, but they're paying that more quickly. But anyway, basically what happened was the amount of debt that the Treasury said they anticipate issuing next quarter was like, it was still a lot, but like still way less than what was expected by markets, right?
Right.
So, yeah, and so, that had a big impact on the bond market because, you know, basically there was anticipation that there was going to be all this supply coming onto the market, so prices were lower by anticipating that. And then when that news came out and it surprised markets, bond prices rallied a lot in response to that. And then bonds rally, meaning rates. So bond prices go up, so rates come down a lot.
Mm-hmm.
And then that then is interpreted by the stock market as like stimulus, right? Because rates are now lower than they were. So literally from that announcement, you saw like the days following, you see like the brunt of the move in the stock market. And so that was really the first trigger. And my thesis is around the higher rates narrative, right? And so this basically, it was like a short term counterbalance to that whole narrative, right?
Yep.
It was like a short term stimulus, and drove rates down, and therefore like stocks go up. So, and then following that, in the coming weeks, we had, and I think you're going to talk about this more, but like a lot of earnings surprises to the upside.
Mm-hmm.
So, companies are.
Okay, FaceTime.
Yeah, so stocks are having higher earnings than what are priced in, so that has upward pressure on stock prices. And then I think the other big thing that I was kind of aware of was unemployment came in better than expected. So yeah, that again is another upward pressure on stock prices. The problem here is, though, in terms of like my positioning, my thesis is still unchanged, right? And that's kind of the problem with like making trades based on like valuations, right?
Mm-hmm.
My 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 thesis is like there's this cohort of the stock market, basically like these tech stocks and interest rate sensitive stocks that are just really, really, really overvalued, like based on the current circumstances.
Right.
And so like I took that, position to short them, and that is now that's gone against me. But it's like now that it's gone against me, it's like I think they're even more overvalued, right?
Right.
Because they've gone up even more.
Right.
So it's like I still want to be short them, but clearly my timing was off, and I still think they're gonna, eventually that at some point that has to come into, an equilibrium. But the question is like when, and so it obviously wasn't, when the timing that
Right.
I anticipated it was going.
But
to
I
be.
guess luckily for you, your contract expiries are all like way out in the future, right? So you still have plenty of time for this to, for there to be a
Yeah.
market correction, and then
Yeah, so that is one that is, and that's kind of why I chose to pick these longer dated contracts, because I didn't know exactly how long it would take. But kind of part of the problem was I didn't account for this happening
Right.
at all. Like,
right.
and so like now, even though my thesis is still the same, it's like I feel like my time frame has like been extended down the road. So like even those longer dated contracts, like I wish they were even further out than they currently are. And also like maybe I wish I probably like this was a big rally. Like I expected like there could be some rally
Yeah.
in the interim, but like I didn't expect it to be this big. So like if I were to reposition or take positions again right now, like they would probably be at like higher like strike prices, like at closer levels than they currently are.
Yeah.
So yeah, I don't know. This is kind of the problem with like trying to time the market, and especially
Right.
and like getting the timing right is so crucial with options, because it's like if you don't time it right,
Yeah.
it's
It's the difference
it's
between
like that's built into the product.
right.
So,
It's the difference between $1,500 and $350.
yeah. And so like if you were just short the market, like if you were shorting, the SPY ETF, you could just say, okay, well my timing was wrong, but I could just hold.
Yeah.
And maybe I won't make as much profit or whatever, but it's like I can just like, but this is like, okay, well, what are my options here? It's like I could, I could say, hey, my timing was wrong, cut my losses, and then just kind of reposition myself for maybe the same trade, and hope that I can like make my money back, or get it right, get it a little bit more right,
Yeah.
and maybe make some money from here. What I don't know is like, this is like the tough part. It's like is repositioning myself, like selling them off right now and repositioning myself, is that gonna change anything relative to if I just continued holding and just seeing if we get another sell off? These options contracts should go up in value a lot. So it's
Right.
like, is repositioning with like different strike prices and different expiration dates, is that like gonna is that going to be any better than just like holding what I already have and like hoping that I can like get back to like a break even
Yeah,
type situation and then maybe reposition from there?
right. My initial
Um,
instinct is that no, like I don't think it would make any difference. Like if you sold now, you're taking a huge loss, and then you'd still have to shell out like several hundreds of dollars to take your new positions. Which
mhm.
at that point it's like why not just hold and see if there's some sort of correction, even a small one, that gets you back up to like $700 or $800.
Yeah.
And then maybe you're in a better position to maybe readjust your thesis if needed, or just
Yeah.
reposition yourself.
So yeah, I think um, another thing I'm just gonna throw this in there because I think it's kind of interesting, but like um, let's see if we go to let's just maybe I can pull this up. So um, I'm pulling up the VIX, which is just like the volatility
Yep.
index. So yeah, like volatility has gone like from when we did our last update, like volatility had gone up a lot, and now it's like at all time lows now. So like that's just like another thing that that happened, and so like volatility is like baked into the options prices, right? So higher volatility when when volatility goes up, like all options prices go up because basically there's like a higher probability that whatever your strike price is likely to like get hit,
Yeah.
um, just because like the variance in prices is higher. So yeah, so like that's another big thing like affecting the drawdown in the portfolio is like volatility has just come down a lot.
Mm-hmm.
So it's like it, you know ideally if volatility went back up, that would even if it wasn't like even if the move wasn't even like getting much closer to my strike prices, like that that could benefit the portfolio enough to maybe where I could get out and um, reposition myself or
Yeah.
something. But I don't know. Basically, I've just kind of come back to like you know my initial thesis was like I'm gonna take this YOLO bet, um, and then when it came to like I was in profit, I chose not to take any profit because it was like this was supposed to be like a it was kind of all or nothing type thing.
Yep.
And so like now that I'm down, it's like I think I'm gonna try to stick to that and just say that's stick to just the original thesis of the trade, even though the circumstances have changed. Um, Another thing I was gonna say is like this is another like kind of a problematic like this is what's problematic about like taking a singular bet
Yep.
in the markets with all your money because it's like um if I had taken multiple bets or had done kind of what you did and said I'm not going to put all my capital into a
Yeah.
single bet,
Yeah.
I could be sitting here and I'd be down on this position, but I'd have like other sources to like rebalance
Right.
into this trade.
Right.
I could say, all right, well, it's gone against me, but I'm going to double down with the extra cash that I have.
Right.
Or this trade in oil that I placed or the bond market like has gone up or not performed as badly, and so I'm going to just take that position off and put the capital into this trade again. So yeah, that's like just another thought. Like this kind of like why you don't just do like
Yeah.
a single bet because it's like
It's true. It's true. Um, I think you were completely correct. There's multiple different factors at play here. I do want to touch on the earnings uh, one more time, just because I don't know. I obviously didn't think about the other 2 points that you had mentioned. One, because I didn't even know what this funding thing was that you talked about. Had absolutely no idea. But in terms of company earnings, so the last episode that we filmed was, I think, October like 24th or something like that. Right? We're a month later now, and I didn't even take into consideration most Q3 earnings came out that like first week of November. And so I downloaded the latest FactSet report from November 17th. I want to hit you with some facts here. So Q3 earnings obviously came out with lots of winners. 82% of the S&P 500 companies reported above expected earnings per share, which is, I think, they said the highest since Q3 2021, which, in my opinion, like pretty big deal. You know, leading.
No, yeah, for sure.
Leading some of those are Meta. They posted 3 times what their year-over-year EPS was. Amazon posted 4 times their year-over-year EPS. Consumer discretionary, the sector as a whole, saw an average EPS of 20% higher than expectations. So those are going to be like your Airbnbs, Domino's, Etsy's. A lot of different things can fall into that category, but 20% higher than expected. Huge number. So in my personal opinion, I think that's, one of the largest factors contributing to kind of this huge market rally here. What does that mean for my personal long position that expires December 29th? Well, I mean, I hope it continues to go up like it has been. That being said, like I mentioned earlier, I can't sell the damn thing, so does it mean anything? I don't know. Probably means nothing, and I'll probably still end down. But as of today, just to give you a quick update, this is so volatile. Like I'm down another 64. You can't see that because it's not focusing, but another $64 on this position. My total portfolio value, $632. All that to say, guys, it's been a great run. This might be our second to last episode. We might run out of money here.
Yeah. Well, technically, I have $77 that I have uninvested. So, like,
it may be time to make one of those low cost bets. Where you do some buying of some calls, some selling of some things.
Yeah. I honestly I could probably deploy that now. I think that would probably be a good decision.
Yeah.
In regard to your unsellable position, maybe you should just put like a good till canceled order in for it.
Yeah.
Just at
that's
whatever
true.
price, and just since it fluctuates so much, maybe it'll like
hit
randomly.
That's a good point. I could try that. I also have like a ton of unused capital that I can still deploy. So,
well, you could send it over to my account and I could deploy it for you.
Okay. No, but good try. For those of you that thought that Team Jerome was going to miraculously make the comeback, you would have been correct so far. But, keep up with the game. Who do you think is going to be up next time? Use hashtag Team Maddox or hashtag Team Jerome. Or, as Maddox said last time, hashtag Team Neither. Because you can call us the Know Nothing Boys now.
That was the point of this, though. The point of this be authentic about it. Like, it's, we're new to this. And
we're learning that it's really, really difficult. Yeah.
Yeah. Hopefully we're getting a little bit better. Not like, I don't know. We're just like learning about the
I'm
options
certainly learning.
Like, I don't know.
I'm certainly like tracking the market more closely than I ever have, so at the very least, like I'm learning things. So
yeah, that's what matters.
Yeah, you're right. We spent $1,000 to learn about markets.
It's tuition. It's your market tuition.
Yeah.
You gotta pay it.
Well, if you guys enjoyed this video, make sure to like and subscribe. More videos coming out very soon. We're going to keep making this series. So like I said before, hashtag Team Maddox, hashtag Team Jerome, or hashtag Team Neither for who you think is going to hit $1 million first. I guess that's it. That's all I've got. Maddox, do you have anything else you guys want to say to the people?
No, just hit that like, subscribe button, and leave us a comment. If you hate the content, let us know so we can stop wasting our time.
Listen, someone in the comments in our first video said continue making the series. So
that's true. We appreciate that comment.
Yeah,
that's why we're still here. Honestly,
that's why we're here. Anyways, we'll catch you guys next time. Peace.